If y'all can hear me, type hello. Hello, Archipus. Good to see you all. Daryl, Raymond. Hi, Gary. Lucy, is it? Is that Lucy? Hi, Pingtat from Malaysia, right, Pingtat? Okay, good to see everyone here. While we wait for the rest to stream in. Today is an interesting topic. Okay, I thought I want to talk about this. How many of y'all here know about what is the Fed fund rate? If you know, type yes. Hi, The King. Hi, Sheldon. Oh, Singapore, sorry. I thought you're from Malaysia. Okay, so how many have heard of Fed fund rate before? So quite a lot of you all heard about the Fed fund rate, right? They say, hey, if they cut interest rate, cut already will be good. Yes or no? Oh yeah, I forgot. Whatever I share with you all is for education purpose, not advice to buy and sell. Okay, so if you all agree, please type yes. Thank you, Imran, Sheldon. Whatever I share with you all is for education purpose. Hi, Pikatima, we meet again. Okay. Hi, Clement. Okay, so I want to talk about the Fed fund rate because I think some of the graduates may have heard this before, but for people who have not heard of this before, I just want to share you all this. Okay, people say, oh yeah, the Fed should cut interest rate. You know, the more they cut, the better it is. Okay, so I want to share with you all this chart. Okay, before I share to this chart, let me share with you this thing first. Okay. Let's describe, okay, what is the Fed fund rate first. Okay, so okay, so this is from the Fed. Okay, the Federal Reserve of St. Louis. Okay, where they publish the effective Fed fund rate. Okay, some we all know, hey, what is effective Fed fund rate and what is when they talk about FOMC meeting, what are they talking about? Okay, so they are actually hang on, is the Fed rate cut the interest? Okay, so they talk about this guy, right, who talk about cutting interest rate and things like that. What is he actually talking about? Okay, let me just say some definition first. Okay, so the Fed fund rate, right, is actually the interest rate when bank charge other banks for their overnight, okay, for their overnight reserves. Okay, let's say example, I lend money to you, okay, overnight, what is my interest that I charge you? And then we have the Fed Reserve Bank, right, will actually set a target, okay, will actually set a target rate, okay, in 15 March, right, they actually set this Joel Powell, this guy, right, who is like the boss. They say, okay, I want to set this Fed fund rate, the target rate 0 to 0.25%, okay, 0 to 0.25% means the banks, right, among themselves, their target is to charge at 0 to 0.25%. Okay, so that is during the FOMC what they do. Okay, so they meet 8 times a year and then they decide what is the rate that they want to charge. Okay, however, the FOMC cannot force bank. Okay, you cannot force a bank to charge the rate. Okay, the rate is still determined by the negotiation of two banks. Okay, so we have the target rate and then we also have the effective rate. Okay, the effective rate, the real rate that the two banks negotiate, right? What are the interest rate that they charge each other? And this effective Fed fund rate is actually the thing we are looking at right now. Okay, this effective Fed fund rate is actually the thing we are looking at right now. Okay, and currently right now is as of March is at 0.65. Okay, or more. Okay, it's at 0.65 or more right now. Okay, so this is the chart. Okay, this is the chart of the Fed fund rate. Okay, you can go to this website. You all can see the chart, right? Okay, you can go to this website and you know what is the effective rate right now. Okay, so you can also go to let's say 10 years, last 10 years, what is the target, or last maximum what was the target, and then you can see what is the Fed fund rate right now. Okay, during the .com era, 01, 02 up to 02, okay, what was the rate? 1.75, and then during the global financial crisis, what was the price? Okay, so it didn't immediately go down, it go down slowly lah. Okay, so let's say example right now, let's say last 5 years, we are here right now. Okay, 0.65. So far, you all understand? Okay, if you understand, type yes. Okay, so what I talk about the FOMC and the effective Fed fund rate. That's the thing, two things we are talking about. Fed fund rate and the FOMC meeting, what they talk about. Okay, so now the thing is with this, right? How does it affect the stock market? How does it affect the stock market? So think about it. Okay, the rates is like the money, right? It's like the flow. Okay, the flow of money. Okay, and then when they want to increase the interest rate, what they do is they want to tighten the tap, right? They increase the interest rate. Okay, when they want to loosen the tap of the money, then what they do, they will reduce the interest rate. Do you follow what I'm saying? Okay, and what are they monitoring? What are they looking at? Is basically like the economy. How is the economy doing? So if the economy is doing well, if the economy is growing, then they may slowly tighten the Fed rate. Do you follow what I'm saying? Okay, because they don't want it to go up too fast. Do you follow what I'm saying? They want to control. They want to slowly, it will go up slowly. Okay, if the economy is doing well, they will increase slowly. They don't want to over tighten because the economy can be in danger. Okay, so they will slowly increase that rate until a point they say, hey, we tightened too much already. Okay, now economy is not doing well. Let's release more money into the market, so they reduce this lah. Do you see what I'm saying? So there's always a lag between what the economy is doing and also what the FOMC meeting or what they're doing in the rates. So when they meet, right, they say they reduce. Okay, there's also a lag. When they say they increase, there's also a lag. Okay. Any question? But the basic principle is like a guy trying to figure out how much to open the money flow and how much to close the money flow. Okay, and theoretically it's like that. If I open the money flow, then everything will be all right. If I close the money flow, then everything will be tightened. Okay, theoretically it's like that. Hi, Frost. Okay, theoretically it's like that. But is it true in real life? Is it true that once they loosen, right, then everything will be okay, and once they tighten, then it's not like that. Okay, so next chart I want to show you all is okay, yeah, I can show you all this one more time. Okay, this is the target. Okay, this is the target rate. Okay, the historical Fed fund rate. Okay, the FOMC meeting meet 8 times. Okay, as of right now is 0.5%, but the effective rate right now is 0.65. Okay, so right now let's plot, right? Let's plot this effective rate. Okay, let's plot this effective rate against the S&P 500. Is it true that once they loosen, then everything will be okay? And is it true that when they tighten, then it's not okay? It's not like that lah. So you can see from here, right? Okay. November 2000. Can you see this chart? November 2000, they start cutting interest rate. They cut for how long? Okay, they cut from here to actually cut all the way until here. 500 over days, yes or no? From here, right? Look at the blue line, right? They cut until zero. They still remain zero. Okay. So the whole, let's say we talk about until the final rate, the final low, right? From here, cut until here, took about how long? About 1,000 days. Can y'all see? Behind the, maybe you cannot see, but this figure here is 1,000 days, 1,008 days. Okay, so they cut 1,008 days before before the rate finally go to zero, and then after that they will increase again. Okay, so let's take a look at this. Okay, does it mean when they cut, right, the interest rate will, or the stock market will immediately go up? The answer is obviously no. Yes or no? Okay, the answer is no. So when they cut, right, let's say example, they cut to halfway through, right, the market still go down. Okay, they continue to cut, still go down, continue to cut, still go down, continue to cut, still go down. Okay, you follow what I'm saying? So at the end of the day, when the real even when they cut to the lowest point, by then the stock market start to go up. Okay. Okay, so what I'm trying to show here is slow. It's slower. The stock market is actually in front of what's happening to what the people are handling. Okay, the fact they are always slow. Okay, they do it slowly when the thing peak already. They do it slowly in releasing, and even when they release, it's not immediately you see the effect. It's always lag. Doesn't mean once you cut means that's it. Okay, so the first one, this one from peak to bottom. Okay, the peak to bottom 1,000 days. Then finally, after 1,000 days, about when the market bottom. From here they start to cut, right, until the market bottom was 735 days. You all cannot see, right, but it's 735 days before the market bottom. For the peak, I'm saying for the peak. Okay, they start to cut. Until then, it's 175 days. Okay, so now let's take a look at the next one. Okay, next one is the global financial crisis. Here, when they start to cut, can you see here? They start to cut. They cut very drastically. Can you see this very steep curve? They cut very drastically, and then eventually the bottom was 600 days. Okay, 600 days. This is weekly chart. Okay, this weekly chart. So about 600 days later, then the market bottom. Okay, that is from June 07 to the finally when the market bottom here is February 09. Okay, so reaching us is the effect not immediate. Yes, that's what I'm saying, right? Correct. Let's say example, we see fire already. Then we turn on the tap. The tap must go through the holes, then reach the fire, then can spray the fire. Yes or no? The fire may still be burning. Yes or no? Even though you fully open your tap right now, you open the tap right now, the water must travel from your tap to the hose, from the hose to the economy. Yes or no? Okay, it will take time. Okay, it's not immediate. It means once you cut off, means is market stop dropping, is going up. Okay, take note one more thing is right now here we are comparing the stock market with the Fed fund rate. We are not even talking about recession. We're just talking about stock market with Fed fund rate. Do you follow what I'm saying? Recession is even slower. Okay, even slower than that. Okay, so right now this is about 600 over days. Then right now from here, right, we start cutting, right? How many days already? It dropped, right? It dropped how many days already? From here to here, about 200 days. Okay, about 200 days. Okay, they slowly cut, and then recently they cut more drastically. Okay, Before that, they were cutting like 0.25. I think like half a year they cut one time, and then another half a year they cut one time, and then suddenly, wow, something wrong. They cut very fast. Okay, but know that even when they cut very fast, it's not immediate. The market will recover. Okay. Do you all have the distinction over here? Okay. In fact, right now, right, if you look at it right now, the effective rate is not even at the bottom yet. The effective rate is 0%. Okay. Here, okay, from 2009 to about 2015. You see, they left it open for so long. The tab, they left it open for so long. That's why the market go up. Okay, go up. And then after that, they start to tighten now. Okay, they start to loosen. Okay, right now. Okay, so my point is, guys, you cannot use the Fed to determine where the stock market is going. It's always going to be behind, not in front. Okay, so that is the takeaway. Okay, so then the next question becomes, Collin, if you cannot look at the Fed, what the news, how to know where the market is going, then what can you do? Yes or no? If you cannot see, if you cannot depend on the Fed, then what can you do? How many want to know what to do? If you want to know what to do, then type yes. Hi, Abby. Okay, that's what I mentioned, right? We cannot use the Fed because it's always slow. It's always slower than what's happening. So if we cannot use that, then what can we do? Okay, I'm going to share. So now the context becomes different. Okay, we are not really like timing the market. Okay, we're going to be very long term. Okay, we're going to be very long term, but we want to more or less know recession, after recession, when recession happened, and after that, when can we buy? Yes or no? You want to know when to buy, right? Okay, so I shared with some of them already about this idea. Okay, I shared with some of you all this idea before. Okay, I'll just use very simple thing. Okay, just use a line. Okay, not even a candlestick chart. Okay, just a line like that. Okay, and what kind of things can I plot it in to know what to do? Okay, what kind of things can I know what to do? Okay, later Archer asks, can you fix as an indicator? Also cannot. Later I'll show you why if you want to know. Okay, so what can you do in this situation? How do you know whether we are going into recession or we are not going into recession? Okay, so if you are long term, what can you do? You can plot a moving average, a long-term moving average. This is weekly chart again. Okay, this weekly chart again. Okay, of course you can draw trend line. Okay, again, trend line is like you can draw things like that or things like that. Okay, you can do this. Alternatively, there is another way. Okay, another way to look at it is you can also plot a long-term moving average. Okay, you can plot a long-term moving average to see where are we. Okay, if we are going to recession. Okay, by the way, just down over here, right? Okay, can you all see this chart? Okay, recession, right, is the gray part. Can you all see? So when the cut halfway there, like here, right, cut halfway there, then we go into recession. Can you all see this? Oh, this one also same thing, right? When it cut halfway there, around here, then the economy go into recession. Okay, right now, haven't yes or no? Not yet recession. Okay, assuming, okay, a lot of people say Bloomberg, I think 100% recession rate. But assuming we go to recession, okay, assuming we go to recession, then what's gonna happen? Okay, actually this is also not high. Okay, not high. Okay, so what I'm gonna do? Okay, so what we can do, a simple way is Just plot a moving average. Okay, you can plot a moving average. Okay, let's make it as simple as possible. Okay, let's put as simple as possible. And because we don't want to be complicated, right? Okay, we don't want it to be too complicated. Okay. So one of the way is just to plot the 200-week moving average instead of 200 days. Is 200-week moving average. Okay. Over here, notice that it's just two lines. So we have the price line, which is the blue color line, and the red line, which is the moving average line, okay, which is the 200 moving average. And then we can see when the price, look at it over here, it crossed below, and then it crossed above, then eventually it crossed below, yes or no? Eventually it crossed below, and after it crossed below, the market dropped down, yes or no? Same thing over here, it crossed below, it crossed above, and then eventually it crossed below again, then market come down, yes or no? Okay, so right now we are here, it crossed below, it crossed above. Now the next question is below on top. Okay, we don't know that, yes or no? We don't know whether it's going below on top, okay? But this morning I mentioned already, right? This morning we mentioned the weight of the evidence and things like that, okay? So you can use this as a guide, yes or no? Okay, so use this as a guide. How? Example, right now, if price cross below again, okay, let me draw a line. If the price cross below again, okay, then it's going to be very similar to here, and it's going to be very similar to here, yes or no? Then we know more or less we are at recession. Okay? Can or not? Okay, the context here is long term. Okay, for graduates, you've got other better methods to do it. Okay, this is for people who are long term. Okay, you want to look at how the market is doing. Okay, you can also do another thing. Okay, you can plot another moving average. Okay, Mark like to use the 30 moving average. Okay, that's Mark's moving average. Okay, 30 moving average. You can use 20 or 30, doesn't matter. Okay, so let me change this line so that it is clear. Red and let me see, red and green. Okay, red and green. Okay, so take a look over here, guys. Okay, when you want to eventually buy, right, what must you look at? Okay, this is in 2000, year 2000, after the .com, and then we have the September 11, and after September 11, the SARS. Okay, so right now we have this line. Hang on, let me make this line thicker. How to make it thicker? Like that. Okay, like that. Okay, can see. So if you're the long-term type, then chill relax so what you want to look at is one of the things you can look at is this 30-week moving average and the 200-week moving average. Okay, you look at this. This is like the representation of the price. So Mark talk about the slope. Okay, the slope of the moving average sloping down. Yes or no? Then eventually sloping up. Can you all see that? Okay, that is long term. Okay, and then over here again, sloping down and eventually sloping up. Yes or no? Can see that? Okay, And then right now is what? Sloping down. Okay, right now we are in a flux. We don't know whether it is going to up or down. Okay, this morning I mentioned already got some TA. Okay, but at the end of the day, it is about what? Two things. From one, can the price drop below my trend line? If it tests and then drop below, more confirm. If it drop below, if it break this low, even more confirm. Okay, so but what you should not do, is aggressively buying at this moment. Yes or no, guys? Because if you aggressively buying at this moment, okay, it is like how? It is like the market is injured already. Can you see here? Like injured already. Okay, you already say, oh, this boxer already injured already. So if the boxer injured is still bad, it's going to win. It is going to be risky. Yes or no? Okay, and it haven't been injured. Seriously injured. Likely injured have, but seriously injured. This is slightly injured. But seriously injured is only recently. Yes or no? So if he's seriously injured right now, then don't go and bet on it. It will still win the war. Okay, so with the Fed fund rate just now we talk about, and this TA part, a little bit of TA part, I hope it's useful for you all to look at long term what to do. Okay, 30. Okay, 30. Okay, and the 200 weeks. Okay, 200 is like long term, guys. Okay, 200 is like this long term line, red line. Okay, but notice that when price drop below the red line, it's not laughing matter. When price here drop below the red line, it is eventually, this one eventually drop below red line, is a 36% drop. Okay, this it dropped and went above, right? Then went below again, so 36% drop. Similarly here, it went down and then go above, then went down again, right? If it drop below from here, if it drop below, is another 50% drop. Okay, so right now like that lah. Okay, can or not? Our point is not to predict. Yes or no? No need to predict one. Our point is see then do. Okay. Okay. One last thing before we go. In this market, right? That's not 2040 MA is different. 2040 MA is swing trade. Okay. Right now we're just talking about long term. Okay. Okay. In this market, stock selection become even more important, guys. Okay. Because I think after this whole COVID virus situation, right, there will be two kinds of stocks. One kind of stocks, right, after this COVID virus happened, right, will get stronger and stronger. Example like Zoom. People used to it, right? Used to this kind of technology, yes or no? After 20 days, after 1 month or 2 months, hey, actually I can do online meetings. Okay, I can do webinar like this. People used to it already. In the future, when this thing lifted, right, it is possible that people will still be will still use this kind of technology. Yes or no? Hello. Yes or no? If you agree, type yes. Okay. So same thing like example, people who never use Zoom, or people who never use Grab Food and all this delivery service now they say, hey, it's so convenient. I can use Grab Food, I can use Deliveroo. All this can become very ingrained into their habit already. Yes or no? So there will be certain stocks or certain business after this whole situation will become better. Even like Microsoft Teams, Microsoft Teams is similar like that. Some of people don't know what is Microsoft Teams. Because of this situation, people say, hey, you can use Teams, can use cloud technology. So there will be certain business out of this crisis will be born. Okay. Okay. But there will be certain business after this crisis may not be there anymore. Okay, example, like you look at oil price today. Wow, crazy today oil price. Do you all see the oil price today? Okay, what I worried, right, is if the oil price is down 21% today. Today, it's down 21%. Can you all see that? Okay, it's down 21%. Okay, right now it's $14. Okay, what you worry is not really the oil price, guys. Oil price is one thing. What you're worried is the companies that are leveraged during the good times. You know, during the good time, they go in high leverage, right? They issue bonds, they borrow a lot of money because cheap money, they call it cheap money, right? And then right now with the oil price at this level, do you think they have money to pay or not? Their business is losing money. Do you think they will still have money to pay or not? May not have, yes or no? Okay, you agree or not? So there will be some business after this whole crisis don't have this business anymore. Got it? Okay, there will be some business after this, no more such business. So then what happened is the stock selection become so important. Agree or not? If you agree, type yes. Or if you agree, type yes. So the key, guys, is to even before like, hey, looking at where the market is going and things like that. The key is, can you buy good stocks or not? Do you follow what I'm saying? Can you buy good stocks or not? Can you buy stocks that will thrive in this situation? And can you avoid the bad stocks or not? Okay, because there will be stocks that are highly leveraged during the good times. Even I share with you some of the REITs, even if they are highly leveraged and this thing continue, right? And if they cannot, they default, then how? Or if they need to do right issue, very common is, hey, no money, investor, can you please put in more money? At lower price, then how? Do you follow what I'm saying? So stock selection become so important right now. Okay. So what are the stocks that they will be benefiting from this? Think about it, What are things you use? Okay, Zoom, Microsoft Office. What else? Who can tell me? Some of these technology companies, Dropbox. Dropbox no Dropbox because I think the business is not so good. Okay, because Microsoft is really taking up their business as well. But you understand what I'm saying? People will be used to all this technology. Okay, Amazon, yes, Amazon. Okay, people are very used to buying things online already. Okay. So do take note. Just put into their mind what mindset. What are the things I'm using now? Okay. Enabler of business. Okay, and then what are the business that after this, some of the retail example, if it's so convenient, I can buy online, then some of the retail may not be there. Yes or no? Okay, so but and then eventually you must be systematic in your approach. Okay, so that's it. Okay, I hope I have add value to you all today. Okay, it is at the end of the day, for me is be objective. Okay, be objective. No need to predict. Netflix also, no need to predict. Just look at what the market is doing, then trade that. Correct? I'm saying you don't need to go and predict where the market is going. Okay. So some question is, you see, oil crisis, right? Which stock? I mentioned already, right? Okay, which stock we mentioned already? Just now, all the stocks there's going to be benefit from this. That means last time people don't use all these service, now they used. Okay, all these service. Okay, these will be things that will be useful. Okay, and okay. So before you all go, tomorrow we still have another 21 days, right? We're at day 6, I think. Okay, tomorrow 5 o'clock we'll be back here same time. Okay, so thank you very much. Thanks for joining me. Okay, you have anything you want to learn? If you have anything you want to learn, you can type at the comments. Okay, then I can also do it. Okay. If not, then thank you. See you. Bye.